Welcome everyone. So today we are going to discuss about partnership formation. Okay, so we will also discuss about some overview of partnership and the process on forming a partnership. Also, we will discuss about some accounting methods used in accounting for partnership. Okay, so please take note that partnership, okay, is just like a sole proprietorship accounting, so if you can remember all your basic accounting, all the journal entries, adjusting entries, okay, so it's all the same pagdating dito sa partnership. Okay, so the difference only lies on the accounting for the equity. Okay, so the accounting for equity ng partnership, it's because sa sole proprietorship, of course, isa lang yung equity account. While in partnership, of course, it is composed of more than two. I mean, two or more capital accounts. Okay, so let's start. Okay, so let us first define what is a partnership. Okay, so a partnership daw is an association, formation of two or more persons of business or practice of profession. So two or more persons, take note, a person. Okay, it is either natural person or a juridical person. Okay, now what happens between that two person? Okay, so both of them enter into a contract. Okay, so the two person um, enter into a contract. It is either verbal, okay, or written contract. Okay, so that written contract, okay, yan yung papers, or it's either verbal nga, okay, yan yung agreement nila between the partners. Okay, so the two person, natural or juridical, okay, so form, okay, a partnership. Okay, another, all of them, okay, contributes either money, property, or industry, or the combination of the three to a common fund. Okay, so we all know about money, we also know about property. Okay, so when we say of industry here, it is labor. Okay, it a partnership can also exist if isa is yung capitalist and isa yung will work on the partnership. It can also exist like that, no? When you say of industry, the partner will use all of his time, okay, so managing the partnership, even though he or she does not have a money or capital or property that he or she will contribute to the partnership. Okay, as long as, okay, he will serve the partnership, he will work for the partnership, okay, he can also be considered as a partner. Okay, now, so their intention is to divide the profits, of course, and the losses they gained among themselves. Okay, so yan yung definition ni partnership. Okay, now, what are the reasons of forming a partnership? Number one, the partnership daw permits pooling of larger capital and other resources without the complexities and formalities of a corporation. Yes, sabi nga nila, two brains is better than one, di ba? It also applies here in partnership. Okay, so if a proprietor only have 50,000 pesos, okay, and another proprietor have a 50,000 pesos capital, if both of them, okay, contribute, okay, they will form a partnership. Okay, so they will have a larger capital. Okay, a larger capital means more product or services that they can offer. More products or services that they can offer, it means larger profit or more income for the both of them. Okay, so another reason is that it is easier to form and less costly to establish. Yes, it's because a partnership can exist, okay, only by agreement. Okay, like what I have said earlier. Okay, so partnership can be established, can be formed by just a verbal agreement. Okay, so but it is always recommended na mag-written. Okay, it's because it is very hard um, to prove the partnership if walang written agreement. Okay, but take note ha, verbal and written agreement can be accepted in forming a partnership. Okay, now it is not subject to too much government regulations. Okay, especially taxation. Okay, kasi sa partnership, although a general partnership can be taxed like a corporation. Okay, so a practice of profession, a partnership that is intended for the practice of profession, okay, it is they are taxed based on individual taxation rather than a corporate taxation. Okay, so another, partners may be able to operate with more flexibility because they are not subject to the control of a board of directors. So if you can remember, board of directors, okay, sa corporation yan, they are the um, it's like they are the head of the corporation. Okay, they decide for the corporation, and they are the ones who control the corporation. While here in the partnership, all of the partners, okay, are entitled for the decision making of the partnership. Okay, so what are the types of partnerships? Dalawa lang naman. It is either a general partnership or a limited partnership. Okay? But here in the Philippines, general partnership lang yung nag-exist. Okay? Walang limited partnership. Okay? So a general partnership, those are partnerships in which each partner is personally liable to the partnership's creditors. Okay? This is the primary difference between the general partnership and a limited partnership. Okay, it's because on the general partnership, all of the partners are considered a general partner. Okay, when we say of a general partner, okay, so that general partner, okay, so all of its properties, okay, even all of its personal properties, okay, it is considered part and liable of to partnerships creditors in times na hindi mababayaran ni partnership yung creditors nila. Okay? If partnership assets are not sufficient to pay such creditors. Okay? So all partners are referred to as general partner. While a limited partnership, okay, it is only required to have a one general partner and the rest can be a limited partner. Okay, so this kind of partnership has only one partner that needs to be a general partner. So the remaining partners can be limited. Okay, when we say of limited, it means that their obligations, their creditors are limited only to their capital contribution. Okay, but take note how walang limited partnership. I think in the Philippines, only general partnership is allowed to be established in the Philippines. Okay. So also, okay, like what I have said, practice of profession can also be um, used, okay, to form a general partnership. Okay. So what are the features of a general partnership? Of course, some of it medyo alam nyo na and na-discuss nyo na on your basic accounting. Okay? But we will just review. Ano? So, first feature of a general partnership is that it is easy to form. Okay? So, the partnerships merely put their agreement into writing concerning who contributes assets or services, their role functions, and how profits and loss are allocated. Wala nang ire-register sa SEC, unlike sa corporation. Okay? There are lots of governing bodies na kailangan nilang ipasa or isubmit in order to form a corporation. While a partnership, wala. Okay? They just need to agree on something. Okay? Now, another feature of a general partnership is that it has a limited life. Okay? When we say of a limited life, if one of the partner, okay, wants to leave the partnership, okay, automatically the partnership will dissolve. Or one of the partner dies, okay, automatically the partnership will dissolve. Okay, yan yung meaning ng limited life. And take note that, for example, um, there are three partners. Okay, may three partners in a partnership. Partner A, partner B, and partner C. Okay, if partner A dies, okay, partner A or partner A cannot transfer his rights to the partnership or his or her share to the partnership to other people, even to his family. It cannot be done. Okay, so the moment that partnership A dies or exits the partnership, okay, the partnership of the three people will dissolve automatically. Okay, walang transferability of ownership dito. Unlike on the corporation, the shares of a shareholder can be transferred into another person. Okay. Now, assignment of partnership interest. So assignment of partner's interest does not automatically dissolve a partnership since the relationship of the partner to the other partners is a personal one. An assignment of a partner's interest does not automatically admit the assignee into the partnership. What does it mean? Okay, for example, on the three partners, okay, so sabi ni partner A, okay, sabi nila, partners, I have a utang or loan to other people, to third party. Pwede ba na yung income or ang profit share ko, I will give it to him? Okay? As long na hindi siya namatay or as long as he is not dead or he wants to exit the partnership, okay? Those assignment of interest to other people does not automatically, okay, give the right, okay, that to other people or to that creditor to be a partner of a partnership. Okay, so the partnership still remains intact between A, B, and C. Okay, even though he or she assigned his interest or profit share to other people. Okay, yan yung meaning yan, yung assignment of partners interest. Okay, another feature is that it can have an unlimited liability. Okay, so what does it mean? So the term general partnership, as previously discussed, refers to a firm in which all partners are responsible for liabilities and have all the authority to act on his behalf. So when we say unlimited liability, all of the creditors can pwede niyang habulin, okay, even the personal properties ni partner, okay, in a general partnership if the partnership cannot pay all of his creditors. Okay. Another feature of a general partnership is mutual agency. So it means that every partner is an agent and has the authority to act for the partnership and to enter into contracts on its behalf. Okay, as long as the contract, okay, entered into by a partner, okay, is aligned with the business and it cannot harm the partnership. Okay, and it is legal. Okay, once na yung um, pagiging agent niya or pagiging representative niya to that transaction is illegal or parang can be done. Once that it is done, it can damage the partnership or the business. Okay, so the partners can stop the transaction. Okay, but as long as those agreement or contract, okay, gives the partnership, some profit, some advantages, okay, so it can be done, okay, as long as it is legal. Okay, so another feature, partnership daw is a separate legal personality. So partnership law provides that partnership has a juridical personality separate and distinct from that of each partner. The same with entity theory ni sole proprietor. So sabi natin sa accounting, the business must be separated on the personal things of the owner or the sole proprietor. So sharing profits and losses. So profit and losses are shared among the partners in any manner to which they agree. Okay, so if walang agreement based on their capital contribution. Okay, for the industry partner, when we say industry nga, wala siyang pera or wala siyang property na kinontribute, as long as the money or the share of profits given to him or her is justified, Okay? So meaning if the profits is high, of course the share of that industry partner is, you know, it's justifiable, it's just, and it has an equal proportions to other partners also. And take note that an industry partner does not share with the losses. Okay? The industry partner only share with the profit, but they cannot share for the losses because at the first place, di ba, wala siyang kinontribute na cash or property. Okay? So underlying equity theories, okay, proprietor and entity. So proprietary theory, okay, it means that the entity through the eyes of the owner, it views the assets of a business as belong to the proprietor. So the liabilities of a business are debts of the proprietor, and the profits generated therefrom are viewed as an increase in the proprietor's capital. So later on, when we solve for, especially on the operations of the partnership, there are, when they share profit, they always first give interest or they give salaries to the partners. Okay, so whatever money they earn from the partnership, okay, it is not their income. Okay, it's not their income per se, but it is part of their capital, capital account. Okay, so next is the entity theory, views the business as a separate and distinct entity possessing its own existence apart from the individual partner. So profits earned with the partnership are usually viewed as profit to the entity, with each partner entitled to a distributive share of the profit. So the legal life of firms in this fashion transcends the death or admission of a partner. So in partnership agreements, for instance, the so-called big accounting firm should provide the continued existence of the partnership beyond the death of a partner. So mga primary exceptions lang, okay? But mostly, generally, okay, so partnership is distinct and separate from its partners, okay? So accounting for partnership activities. So to maintain partnership accounting records, it might be possible to have one ledger account for each partner. Okay? Yun yung sinasabi ko kanina that sole proprietorship and partnership is identical and the same in terms of their accounting pagdating sa asset and liabilities, okay, and some other accounts except for the capital accounts. Okay, so because in partnership, capital accounts are more than one. Okay, so in the usual practice is to maintain three types of accounts. This partnership consists of, number one, capital accounts, of course, more than one, the drawings or personal accounts, and the accounts for loan to and from partners. Okay, so let's discuss one by one. So for capital accounts, okay, so for capital accounts, these are the activities, the transactions that affects the capital accounts of each partner. Okay, for each partner. So number one, on the left side, okay, I prepared some, the account here, okay, which signifies that on the left side here, okay, it is on the debit side, and on this right side, it is on the credit side. And take note that the capital account na normal balance is on the credit side, meaning on the credit side, this side increases the capital account, and this side on the left side decreases, okay, the capital accounts. Okay, what are the things that decrease, okay, the capital account? Number one, permanent or capital withdrawal, drawings in excess of a specified amount, withdrawal of large and irregular accounts, share in net loss, and closing of a net debit balance in the partnership drawing account. In times na may loss, of course, mababawasan yung capital accounts ni partner. While on the credit side, this side increases the capital account. What is it? The initial or capital investment, the additional investment, and the share in net income. Okay? Kung kanina, if my loss, of course, the debit, while on kapag income, i-credit yan for the capital account. Okay? While on the drawing accounts, dalawa lang. Okay? And take note that this drawing account is only temporary, guys. This drawing accounts is temporary, and at the end of the accounting period, it is closed on the capital account. Okay. On the drawing account, personal withdrawals in the anticipation of profits. So it's like a temporary withdrawal and periodic withdrawal. When we say a periodic, it's like a normal and common withdrawals for each partner. It's like a salary, okay, for them, but it is not considered a salary because whatever they take and enters some profit or from losses, okay, from the partnership, it is considered as part of their capital accounts. Okay. Next is the loan accounts. So rarely a partner may receive cash from the partnership with the intention of repaying this amount. So such a transaction may be debited to the loans receivable. What does it mean? If si partner, any partner, okay, sabi niya, I will borrow from the partnership, okay, it is not automatically debited from the capital accounts, but it is considered as loans receivable from partners, considered as asset on the partnership financial statement. On the other hand, okay, a partnership may make cash payment to the partnership that is considered as a loan rather than increase in the partnership capital. So if the partnership borrows money from the partner, any partner, okay, so it is considered as a loan payable to partner and considered as liability on the partnership financial statement. Okay. So accounting for partnership formation. Okay. In here, we are just beginning. Okay, we are just starting creating the partnership. So what are the things that we need to consider in a partnership formation? Number one, cash investments. Okay, so in accordance with the current standards, being a financial asset, it is recorded at fair value, most often known as face value as far as cash valuation is concerned, which is the amount payable on demand or to be collected at the balance sheet date. Okay. Another is a non-cash investment. So non-cash, of course, it is a property, okay, recorded at the agreed value, which is normally the fair value of the property at the time of investment. Okay. So a partnership may be formed in numerous ways. Number one, for the first time. When we say for the first time, two or more individuals, okay, walang existing business, they form a partnership. Pwede yon. Okay, so they can either contribute money, they or non-cash investments or non-cash investments. Okay, or conversion of a sole proprietorship to a partnership. It can be one individual that does not have a business and another individual which has an existing business, okay, which is a sole proprietor. They form a partnership. So what will happen to that? Okay, so individual can either contribute cash or non-cash assets, and the sole proprietor, may mga basic accounting procedures that we need to undergo, we need to do, okay, like the adjustments. Okay, so we will discuss that on the next video, okay, which is the computation, okay, and some accounting journal entries and technicalities in terms of forming a partnership, or two businessman or two sole proprietor, they form a partnership. Pwede yan. Or conversion of an old partnership to a new partnership. So partnership in a sole proprietor and partnership and another partnership. Okay, so we will have a separate computations and accounting for each scenarios here. Okay, so that would be all. Okay, so see you on the next video. Thank you.